Today we have the FOMC decision and many traders are going to repeat the same mistake which they always do, which is focusing on the interest rate decision. No one is focusing on the interest rate decision today. There is almost 100% chance of a rate hold today and markets already know this. That is exactly why the dollar index has been moving higher recently in an aggressive way along with the reason of geopolitical tensions. So what does really matter today? The real game lies in the forward guidance, aka the speech of Powell. It will help you understand that if Powell is hawkish, dovish, or neutral. And in this video, I'm going to tell you exactly that how to spot a hawk or a dove and to understand that how it can impact the markets. See that the Fed has two simple goals: labor market growth stability and inflation stability. If the risks to any one of these rise, they will have to act accordingly. If the labor market or the growth, if they are slowing down, the Fed will look forward to reduce the interest rates so they can reduce the borrowing costs so businesses can borrow more at a low cost and they can put more money in the economy, they can expand more and they can hire more labor market to eventually help the growth problem and the labor market problem. If the inflation is rising or expected to rise going into the future, the Federal Reserve will look forward to hold or increase the interest rates so they can increase the borrowing cost ultimately to reduce the supply, reduce the circulation of money to ultimately then reduce the demand of things to keep the prices or the inflation in check. Now, specifically speaking, for today's FOMC meeting, where we have a weakening labor market, where we have a slowing growth environment, and a sticky inflation which is expected to rise even more going into the future due to the current geopolitical situations. What will the Fed do in such an environment, and how will we know if the Fed is hawkish or dovish? See, if the focus of Fed or the focus of Powell is more on the inflation side, if he is acknowledging the inflation risks more than the labor market or the growth, then it means he is a hawkish. He is looking to hold or even increase the interest rates going into the future so they can control the inflation and control the prices. Obviously, to control the prices, to control the rising inflation, they will need to increase the interest rates. And that's how you will know if he is a hawk or not. On the other hand, if his focus is more on the labor market and growth slowing downside, then it means he is ignoring the risks to the inflation, to the rising inflation right now, and he is focusing more on the weakening labor market and weakening growth. And he is ready to do, he is ready to take any type of action to support the labor market and the economy. If he is more aligned, if he is more entitled towards the labor market, towards the growth, then it means he is a dove and he is looking forward to reduce the interest rates in the future if the labor market and the economy keeps on slowing down. So specifically speaking, in regards of today's FOMC, if Powell's focus is more on the labor market and growth side, if he is acknowledging the risks, the downside risk to the labor market and growth more than the upside risk to the inflation, then it will mean he is a dovish, he is a dove. And on the other hand, if he is focusing more on the upside risks to the inflation than the labor market and growth, then it means he is a hawkish person. He is a hawk specifically for today's FOMC or in today's FOMC. Now, if he is a dove, it means it is a negative catalyst for the US dollar and it will act as a positive catalyst for the US indexes for gold, for silver, and for Bitcoin. Like all the risk on assets, all the non interest yielding assets. But on the other hand, if he is hawkish, if he is a hawk, it will act as a positive catalyst for the US dollar and a negative catalyst for gold, for silver, for Bitcoin, for the US indexes, all of them. Okay, now here is a disclaimer that all of this knowledge, it was specifically in regards for the current situation where we have a weakening labor market, where we have a slow growth and where we have upside risks to the inflation. There can be multiple scenarios which can be formed, like we can have a weakening labor market but a strong growth and a maybe slowing down inflation. What will the Fed do in that type of time? Or maybe we can have all of them slowing down, a weakening labor market, a weakening growth, and a slowing down inflation, or even a disinflation environment. Or we can also have an environment where we have a very strong labor market, very strong growth, and a very high inflation. Okay, there can be multiple scenarios which can be formed. Right now everything was only related to today's FOMC meeting, so you can trade today's FOMC meeting independently. You can have the outcome, you can have the summary, you can have the breakdown of today's FOMC meeting yourself without having the need to scroll hundreds and thousands of posts and analysis on Twitter about the FOMC or the impact of the FOMC. I will update this in a playlist, and I will update more scenarios moving forward about FOMC in that playlist and other educational lectures too. So far, this was pretty much it. If you have any questions, feel free to ask in the comment section, and I will update the relevant links about my socials in the description as well, so you can join them and even reach out to me directly through them as well. Best of luck for the rest of the trading week and best of luck for today's FOMC as well.